Hey everyone, please note that there were a couple references to the Power of 30 podcast, which was the original name of the show, but due to some oversights and the fact that that already exists, we are actually the Real Estate Reveille. So thank you for joining us, and here we go. Hey everyone, welcome to the Real Estate Reveille, your dose of real estate inspiration. I'm your host, Daniel Coletti, and I'm passionate about helping you unlock the secrets to financial freedom through real estate investing and entrepreneurship. Whether you're a seasoned investor or just starting on your journey, you'll find practical advice, market insights, and actionable tips to help you build a thriving real estate portfolio. Let's dive into the world of real estate and take your financial future to the next level. All right, everybody, welcome. Today I got here with me Jefferson Calloway, a friend and a member of my real estate mastermind group. So really excited to have you here today. Welcome.
Thank you, Daniel. I really appreciate it. Thanks for having me on.
Yeah, man. So just to get us started, why don't you tell me a little bit about your background, what you did before you got into real estate investing, and how you got started?
Yeah, for sure. So grew up in Maryland and then went into the military 2016. And that was the time in my life when investing in real estate became a thing. I think everybody in their 20s hits a point where they start really paying attention to their financial situation if they weren't brought up that way. And I was in for 3 years, and that's when my first rental came into play. I was in for 5 years, and then that fourth and fifth year, I had a buddy who I served with who was also a pilot like myself and a warrant officer who was selling a house. And it was just a little single family townhouse in Enterprise, Alabama, which if anybody knows anything about Alabama, it's a very cheap housing market, great place to get started, coincidentally. And I just bought it, lived in it, used my VA loan. And then as soon as I was ready to come back to Maryland, a buddy who I bought it from, the same guy, James Lenore, a good friend of mine, asked if he could live in it because he wasn't ready to leave yet, but he didn't want to buy something else. Made sense. And he said, I'll pay you in rent a little bit more than what you're paying for the mortgage. And to me, that just sounded like the best deal in the world. So I was like, let's go. And every month when it came through, I thought I was just the smartest guy in the world for getting that done. And that's when it all started.
That's awesome. When you actually get started, and I fell into a similar situation where I really wasn't sure what I was doing, and also in the Army, and had to just make that decision to leap in and jump into the investor side. Was that a barrier for you when you decided to do that, or how much of that warrant officer, that buddy that helped you out there, was a factor in making that decision?
Oh, it was everything because I would not have decided to get into it any other way. He just happened to come back to the company honors detachment that day and say, hey, I'm selling a house. Anybody looking to buy one? And then there's also the fact that, he and I already knew each other. It wasn't a typical buyer-seller situation where there's realtors in between us and you never meet that guy. I already knew him. We didn't use realtors at all. We brokered the deal ourselves, just sat at his dining room table and negotiated everything.
Nice.
Yeah, it came down to a price on our own, and then he and I just went to my lender, and that was history. So definitely was not a common way to do it. It was not the orthodox way to do it, but I don't think I would be where I am today if it hadn't happened that way. So it was really a great deal and learned a lot. First deal, most people learn a lot. It was the same thing with me.
Yeah, you had no intention. For those of you who haven't listened yet, check out the Bigger Pockets podcast, the Rookie podcast. The episode came out with Jefferson a couple of weeks ago. A really good rundown of the situation, but you didn't know anything yet, right? This was, hey, why not jump in, buy something, but you hadn't invested in any kind of education or looked into investing prior to that, right?
Yep. It was just the cool hard knocks way because I did it, lived in it, rented it out. And I had the same fears that every beginner does. What if the tenant does this? What if you can't make your payment and all that silly stuff? But no, I had no formal education. I didn't know real estate investing was a thing,
Love
which
it.
I was pretty late to the game. I think it was at this point 28 or 29, late to the game, but definitely made up for lost ground.
Okay. What year was this?
2019, 2020,
2019?
something like that. Yeah.
Okay. Yeah, I bought my first one in 2018, kind of a
There
similar
you go.
situation.
Yeah.
One of
Yeah.
the things I think most people don't realize is, especially veterans, a ton of veterans out there don't realize the superpower that we have, which is the VA loan. And people who don't take advantage of that are just missing out. And for those of you who don't know out there, the VA loan, 0% down, and you don't have to pay the mortgage insurance. And so you're bringing closing costs and maybe some cash reserves, which your TSP or retirement plan can account for that. And so that's awesome. And a lot of people also don't realize that FHA loan is a tool out there that folks in the civilian sector can use to break into this thing. So that's awesome that you were able to do that, man.
Yeah, and also the USDA is a good one for civilians. VA is the only one I'm aware of that is only for veterans, but you can get all these same effects or very near it with other. Even conventional has a 5% down. And the second or third, I think second rental property I bought was also VA because you can use it multiple times. That's why it's another superpower. But I think I came to the table literally with a buck or two in closing. It was just very little out of pocket. And I know they charge a funding fee, but I've been told you can roll that into loan too. You can come zero out of pocket. And as for investors, liquid cash, liquid capital is like gold for us. So reserving it as much as we can will allow us to get that velocity going and buy more and build a portfolio.
Yes, exactly. That's what I did. I bought the condo here in Manhattan in 2020 when I moved out here, and I was able to roll that into the loan and get a concession from the seller so that I
Yes.
literally didn't bring anything. The concession covered the closing costs or, the remaining closing costs, and then built into the rest of the loan were the other fees. And so there's ways to structure these deals that you can get into it really with no money.
Yeah, and another good point is you can only have I don't I don't even know if there's a limit, but I know you can have at least 2 at a time,
Yep.
and that's the key word there, at a time. What I did with one of my first ones, that first one in Alabama, I eventually just refied out, freed up that loan, went and got another one. So if you just keep
Yep.
recycling it, dude, it's I like what you said. It really is a superpower. It's really good.
Yeah, man. So what's all right? So you got through that one. You got your buddy is renting it out from you. You're starting to learn the fundamentals of what it is to cash flow with the investment. Why did you decide to keep it going?
It wasn't my idea, it was his. He was already an investor at this time, and he was just like, about a year passed after that, and he says to me, "I'm going down to Florida." He was running a Turo fleet business down there, so he was gonna move, and that's when I really started to panic because 'cause I'm like, "All right, now I'm talking about a real tenant, a tenant I've never met, a stranger tenant like we're all familiar with." So I was like, "Dude, I've never done that before. I don't know what to do. What if this? What if that?" And he just calmed me down. He's like, "Dude, just call your local property management company. There's one right here in Alabama called KDM, and they'll do everything for you. They fill the unit for you. They take care of the maintenance for you. They keep you in the loop." And I was still a little nervous, but I was like, "All right, I'll trust you." I did it, and it was the best decision I ever made because real estate in Alabama, like I said, is so cheap. I bought this place for maybe 70 grand. It's worth like 150 now. But the mortgage was literally, I'm not kidding you, like 450 bucks. So he was paying me like 550 or 650 or something, and I thought I was making out like a bandit. But then when I go to rent it out with KDM, the new property management, and put a real tenant in there, they were like, "Yeah, you can probably rent that place out for 1,100, 1,150." I was like, "What?
Mind
500
blown.
bucks a month?" And yeah, oh yeah. So all of a sudden, all my panic went away, and it just turned to sheer joy. And I was like, "This is what I want to do right here." So came back up to Maryland, and that's when I kept on moving.
That's awesome. The Power of 30, the namesake of the show, is based off of that idea that the average American spends at least 30% of their income on their housing costs. And if you could simply recapture just that portion instead of worrying about spending less on lattes and Starbucks or eating in and these fractional spending things, the biggest thing we spend money on is our housing costs. And when you flip that on its head and you do house hacking and you can recapture, that is really an awesome way to start getting assets instead of being a consumer and accruing liabilities. And so I know that you down the road, you start to get into these multifamilies and you've got that awesome situation where you house hacked a multifamily and including one of the rooms in your unit. Could you talk a little bit about that?
Yeah, yeah, yeah. I'm telling you, that one was a thing of beauty because it actually was like a little bit of a mistake because of how much I paid for it. I overpaid for it. We'll get to that, I guess, when we get to my mistake portion of the show. But so I bought that place. It was a duplex in Maryland in a town called Trap, and it had a bottom unit and a top unit. I just have always lived frugally. I'm not an extravagant guy. I don't need to be, don't ever want to be. So I lived in the smaller upper unit with my girlfriend at the time, and it was 2 bedrooms. So not only did I rent out the bottom, but I rented out a bedroom in the top. And this part's not super cool, but I even had my girlfriend at the time pay me rent for our portion. So we that thing cash flowed like crazy, and this was before it got turned to a short-term rental on the bottom. So this was all long-term. And I think in total, I think it was bringing in at the time, like it was a $2,300 mortgage, maybe 21 or 22, but I think I was bringing in like exactly that in rent. So to your point, yeah, it wasn't cash flowing the way we think of cash flowing in the rental business, but look at what my housing expense was. zero. So that's a great 30% boost in your net worth, your income, et cetera. And just one other thing I want to point out to your point, because I love the name of the show. It's a really great thing. But in addition to saving that 30% of your housing expense, your living expenses in general, most people don't realize the average 401k at retirement age is $187,000. The average home equity at retirement age is $360,000. So inadvertently, the best investment vehicle anybody in America ever has usually is their home, not their 401k, not stocks, not investing. It's in real estate. So it's a double benefit. You save on your housing expense, you build wealth, and then you're also growing your net worth just by doing what you were going to do anyway, pay for your housing. So
Yep.
it's a good plan.
That's awesome. No, and since we're already on the property, let's talk about that seminar, man. What was the lesson learned there with that property?
So I overpaid for it, and that is because it was my either second or third buy. I still wasn't real great at underwriting, analyzing deals, that kind of thing. So I didn't know how to calculate net cash flow times its multiple as should be the purchase price. Or I since have developed these really great formulas that I can just analyze at a glance. But in the beginning, you don't have that unless you're, studying a whole bunch before you jump in, which I am not that type of guy. I'm shooting ask questions later. So I overpaid for it. And like I said, even renting it out the way I did, which was extravagant, I still was barely cash flowing. So this was 2021 at this point, and that property since then, it's a fixed rate mortgage, so I'm still just paying that 2,100. But now the bottom probably brings in 2 or 3 grand a month just by itself as a short term rental. The upstairs is now renting for 14 or 1,500. And then the property has also appreciated to over 400,000. I think I paid 330, 340 for it. And it was probably not worth that at the time. It might have only been 300,000 or something, but that's just what I love about real estate. And that's why I always am trying to get beginners into it, because even if you suck, even if you make mistake, even if you fail, time heals all in real estate. Time turns every deal into a good deal if you just wait long enough. So it was a mistake, and now I'm happy about it.
Heck yeah. And so now, if I heard that correctly, your revenue on that is almost twice as much as the debt service from the original mortgage. Is that right?
Yeah, but don't let because people seem to do this kind of thing. That's the revenue. Airbnbs, if people aren't familiar with short-term rentals, have a way more expenses than a long-term. I am
Yep.
paying the gas, the electricity, the internet. The property management is more expensive because I got to pay cleaners. I got to pay them to speak to the guests that are going in and out every single night. Turnover every 2 nights. So even though I'm making way more top line, I'm only making a little bit more net profit. So it's really the fact that the top has appreciated in rent so much. The bottom would have appreciated in rent so much if I were doing long term, but even as a short term, I would say it probably brings in top line 4 grand a month, but bottom line like 2,800, 2,900. So I'm still cash flowing like 100, $200 a door or something like that.
No, that's awesome. And that's a great thing to point out there, especially for newbies. When you're thinking about cash flow, especially when you're starting out, people always want to think about just the mortgage. And if you can make more than that, you're good. But the reality is, to cash flow, you got your PITI, so your principal and interest on the mortgage, the property taxes, the insurance on that property, which is going to be more expensive for a short term or an investment property than it would be your personal residence. And then I like Pace Morby, he calls it the war chest. And that's going to be those cash reserves for vacancies, for maintenance, and any kind of capital expenditures you may need to do down the road. And then, like you said, you got Airbnb, the short-term rentals. There's going to be fees to rent out on those platforms. You've got the cleaners that have got to come through and reset that stuff. And so when you're getting into these, you want to make sure that you're accounting for all these things so that it actually is an asset, not a liability.
So true. So true. Yeah.
So that's awesome, man. I'm glad that that turned around for you and got to where it did. I want to hear about what you're excited about. You got this new company, you're doing these renovations. What's this next thing that you're getting into here?
So this has been going on for quite a while now, but when I got out of the Army, I was a warrant officer and a helipilot. I flew 72s. And when I got out in 21, I went and became an X-ray engineer. And that was a great job. I loved it a lot. It was a pretty decent, like 6-figure salary. As most people know, when you're a W-2 employee, you don't control your income that way. You don't control your time, that you don't control a lot of stuff, and you're very capped in your time and your money. So I knew, especially getting into real estate and starting to read all the books and um, that I wanted to quit the W-2 and do something else. So I have a family business that my uncle owns or owned for a long time where they do renovations up in Philadelphia. So I had been bothering about it for years. I'm like, let me buy it and franchise it. I got to do something. I want to do something similar to what you're doing. So he finally was like, look, just took out a loan and he sold me a portion of that company. So I own 25% now, and we do home renovations residential in Philadelphia. And it just is the sweetest business model I've ever seen in my life. There's 800,000 homes in Philadelphia, all within an hour, and they're all 100 years old. So there is just way more demand than any contractor could ever swallow. And it's just a gold mine because the markups are great, the margin's great. If you're good at it, you and I are just good. And I think almost everybody in our group is. We're good at talking to people. We have good ideas. We're very creative. We know business. We're very nice. Be shocked how far that'll take you in any business.
Yeah.
We're just really excelling and growing like crazy. The company was that when I first took a hold of it, 3 million in revenue, and we're on track to hit 6 this year. So that was not even 18, 19 months ago that I bought in, and now we've already doubled revenue, and it's going really well. It's a great active income generator so that we can go and invest it passively.
No, that's awesome, man. Congratulations on that. I
Thank
know
you.
that's a great point too, that'll feed into the passive investing side and getting into more real estate. And I think a lot of us investors now, we cringe when you hear the word passive because we know it's not really passive. And there's a lot of things that go into buying and selling these. But I do want to, how did you get into that side of things? Did you go for contractor certification, or were you doing home inspections? How did you get started with that?
None of it. So in real estate, we had done a lot of done flips and burrs, and so I wasn't a complete stranger. After you buy so many homes and so many properties, you learn the basics, the ropes. So even though I didn't know the nitty-gritty contracting details, you pick that stuff up along the way. Ultimately, what we do is we bring in a lot of subs. We have a lot of guys to actually swing the hammers. I'm really more of a sales and marketing agency. If you really broke it down, we just put out flyers, mailers, internet ads, get calls like crazy, set the appointments, and then I go out and sell the jobs. And yeah, there's a little bit of a learning curve, but it only takes us. Might not be the smartest guy in the world, but if you just work hard, study a lot, you can in 2 or 3 months learn just about everything there is to know about any business, really. So
Yeah.
I was
Yeah.
selling $80,000 kitchen jobs 2 months after being there, and the rest was just history. We've just been growing, learning more, growing, learning more, and they're really synergistic, the two, obviously. I'm still flipping and burring all the time, and so being a contractor also and having that be my active income, you learn a lot from this side, take it to this side, vice versa. And so now the buying, the selling, the remodeling, it all just is one big kind of skill set, and they all feed each other. It's awesome.
Yeah. That is awesome. And did you know, will that end up qualifying you for real estate professional?
I did. So this past year, oh boy, it was awesome. So we bought like probably, I would say 10 or 12 units last year alone, and a lot of them creative finance, a lot of conventional financing. I would say that was a million or two in um, buildings that we bought and purchase prices that you can now all and just bonus depreciate. I think last year it was still 80% bonus depreciation per the IRS, the code, the regulation. So
Mhm.
it made sure I spent a lot of hours. You need 500 hours of material participation, and it has to be documented. They have an app for that called Reps Tracker that another investor created, and I use it, and it's amazing. So you document all your hours, get your 500 hours of material participation, and then as long as you're in a real estate related business with which contracting is, you can go and get your real estate professional and write all that off against your active income. So getting a nice $40,000-$50,000 tax return this year was very helpful.
Yeah.
So
No,
yeah.
that's awesome, man. That's something I've been looking into is what I do. I'm still active duty army, but once I actually separate, and I've been looking at commercial brokering actually. And you and I have talked about getting into the commercial multifamily and other commercial
Yeah.
space, and figuring out where to supplement that. I love that you found something to do on your active side that does that for you.
Yes.
All right, so you're going to be doing that. What's the next real estate deal you got in the pipeline? Or where's that intention? Where are you going with investing?
So I think we're pretty much done. I'm really getting burnt down on single families, just where the price to rent ratios were in Alabama. It still made sense. I've got a nice single family portfolio down in Alabama near the military base. But I've just found that multifamily is just so much easier to work with. Like I said on the other podcast that you heard, one roof, one set of HVAC systems, all that, but you get 4 doors. So if one tenant moves out, you're not completely out of rent. So the plan is to just keep moving forward with multifamily, bigger and bigger multifamily. So we're up to 27 units now, and we're about to make it 30. I've got a 3 unit under contract in Abbottstown, Pennsylvania, and it's 3 or 4 acres of land, a big main house, and then a big ass barn dominium that was split into 2 units. So it's 3 units, $600,000 purchase price. And oh, you're gonna love this. I think it's either a VA. I think it's a VA loan that they got on it, the sellers a few years ago. $300,000 of it is still owed. I'm about to assume that loan. For those listening, subject to is different than assuming. I'm going to actually go and qualify for this loan and take the loan
Yeah.
on with the bank knowing about it, which is not the traditional way to do subject to. So I'm going to qualify for $300,000 of it. The other 300,000, the seller is seller financing to me.
Yes.
And
Yes.
this deal was brought to me by a realtor, believe it or not. So if you find a good investor friendly realtor and oh crap, what is going on with my sorry about that. So you find a good investor friendly realtor and they can bring you deals. That's one more way to do it besides wholesalers. But yeah, this deal is all creative. Both parts are creative. 3 units, so it's multifamily. There's land with it, which never happens in most of my deals. I don't care about the land part. So this will be a great depreciation move for this year's taxes. And we're hoping to close by the new year, but I don't know if that'll happen or not. But that's where we are right now. Got it under contract for our 30th unit.
Awesome. And you're in 7 states right now, right?
Yeah.
Is there
Ohio was the 7th.
okay.
Yeah. Yeah. Pennsylvania, I own one in Philadelphia. So that was the 6th. New Jersey was, no, 5th. New Jersey was the 7th. And then Ohio, yeah, was the 6th. No, Pennsylvania 5th, New Jersey 6th. And then we just went into Ohio last year. So that made 7.
With the move into the multifamily space, are you starting to limit your markets a little bit more, or are you more looking just for the right deals? Like, how are you approaching market selection and where you want to invest?
So the market selection is easy because I'll buy anywhere in the continental US. I got wholesalers sending me and I'm analyzing deals in Texas, Louisiana. I do not care where it is except California. I'm not going there, but everywhere else I'll go. And so that makes it real easy. That's a big buy box, but I'm limiting it on the criteria because I do need to still have a cash flow, especially in this interest rate environment.
Yep.
So for example, my equation is always just total gross monthly rent for the whole property, whatever that is, subtract 30% for expenses, and then subtract your PITI that you're going to leverage it. And whatever's left, that is your actual net cash flow. And that accounts for everything, CapEx, maintenance, snow and leaf removal, whatever the hell else you do, landscaping. I mean, if you use that formula, you're safe pretty much. And so I've been using that as long as it has a good 200 or $300 per door after all of those expenses are taken out, then I'll buy anywhere in the US. And the other thing is it also pretty much has to be creative because I'm really not keen on paying 7-8% interest on some of these properties. Unless it's a great deal, I'll do it. But I just don't find that to be the case. So I've been telling most wholesalers, if it's not creative, don't even send it to me because I don't care.
Well, the other side of that too is, it's not just the interest rates that are going on right now. It's also the fact that the amount of capital you got to bring to that deal. Bringing $30,000 or $40,000 to a creative finance deal is going to get you way more house or property than if you're doing it conventionally. And so
So
that's one of the awesome reasons to get into that.
yeah,
But so this is obviously a long-term career for you. You've got the renovation business going on. You're going to continue to go into the multifamily space. I'm curious, why do you think that you've decided to make this transition to this industry as opposed to just getting out and you could have gone and been a helicopter pilot or worked in a couple of various industries that would have had a pretty solid salary. So why not do something like that and move into this space permanently?
I think it's because of the synergy. I didn't plan for this. When I got out, I was just looking for the first civilian job I could find. And I just happened to have a buddy whose dad owned an x-ray company and he was like, come be an x-ray engineer. So Rothman Orthopedics, all up and down the East Coast, First State Orthos, all these big names, they all need their x-ray rooms installed, serviced, etc. So that's what I did for a couple years. And it's lucrative. That's a great W-2 job. Don't get me wrong. Like I said, that's a 6-figure job. You'd be fine doing that. But like I always just say, W-2 is just so limiting. If you really believe in yourself and you are confident in your skill set, don't settle for any W-2. I don't care how much it pays because you're limited. You're capped. So entrepreneurship I knew was the way to go no matter what. And so starting a business that was, or buying into a business, which I think is even better because you don't have to take all those first, second, third year licks. You're just buying something that's already cash flowing. Buying into a business like that, that complements real estate, which I had already been in and already found out accidentally that I can love it and it's awesome. It was just a no brainer. I was just like, this is great. You can be a real estate professional. That's a big requirement for us now. Yeah, there was never really a decision.
Yeah, no, I love that because like you mentioned, just the synergy, the people that we've met already, and energy, the excitement. It's just a different kind of lifestyle, and then the freedom of working for yourself and being an entrepreneur. There's plenty of demand. There's plenty of things to do all the time, but it's your time, and that's something that I found that I love about it, and made that similar decision where I know it's something that I'm going to be in for a long time.
Yeah, absolutely. And that's the thing. It's up to the person. If you're the type that just wants to come home at 5 and veg out, that I have no problem with that whatsoever. To each their own. But I think anybody who was born like thinking like, all right, I'm going to do something crazy. I'm going to do something great. Entrepreneurship's got to be the way to go because then you get paid for that correlation to how much effort and skill you develop. And the other thing is like how synergistic they are. Like right now, what's the hardest part for most people? They'll tell you who flip houses is finding and maintaining good contractors. I'm like, newsflash, I got 30 crews now. If I wanted to go into Philly and start flipping homes there, which we have a little bit, I just knocked out the most difficult portion of it, holding and
Yeah,
maintaining contractors. It's just instead of doing it for other people, now I do it for me.
yeah, no, absolutely. You mentioned too, like the lifestyle isn't for everybody. For somebody who wants to do that 9 to 5 so that can just go home and whether it's being with their family or they got hobbies they want to spend their time on or do stuff on the weekend, it's a personal decision folks have got to make. Was there a fear that you had to overcome to jump into this, or was it something that you just knew and went with? And then if you could talk a little bit about we talked about the why. What's that mindset? Why does this career field allow you to achieve that why more so than perhaps one of these other career fields might?
Yeah, the why is not what it is for most people. Every time I see other people get asked that, it's always my family, my kids, my parents. And don't get me wrong, I'm retired. My parents here pretty soon anyway. It's just the why is more unorthodox, I think. It's really more about I have seen and watched these high net worth guys, these high 8, 9, 10-figure guys just attain freedom. That's really what it is. I
Yeah.
don't care what anybody says. You watch the Dan Bilzerians of the world, and they just do whatever they want, whenever they want, and people think that's out of reach, and it's just not. So the why for is just, I don't wanna go out and make as much money as humanly possible so that I can go take baths in it. I do it so that I control everything. Imagine if you work at a W-2, you're basically saying right now that another grown man can come up to you and say, "I'm not gonna write you your paycheck today," or, "I'm not gonna give you that raise. I'm not gonna give you that day off so you can go watch your kid's pageant." You have another man telling you what you can and can't do, controlling your pay. Absolutely not. Never gonna happen. That's the why, is so that everybody else I can just say without being crass, "F you. I do what I want when I want. I control my pay. I control everything. I'm in control." So that's the why. And getting into this business was just a very obvious way to get that done. But even if it hadn't been that, I started an online training platform, calstrength.com, and I was selling workout programs. That was another way to do it before this opportunity came along and just beat that out pretty hard. But I knew right away I was going to do something other than W-2 because I've done it. It's okay to get started. And I encourage newbies to still do that because lenders love W-2 jobs. You can make great money. It can get you started. But eventually, I encourage everybody to switch over to entrepreneurship. It's the best. You can't beat it.
Yeah. No, it really is awesome. And I actually love that why, man, because that's something that's really important to me. And we just came out of Thanksgiving and I was talking to my dad a little bit about what I wanted and where I saw this all going. And I love my dad, best guy in the world, the nicest guy in the world. He's worked his butt off for, years and he's getting ready to go to retirement and he's worrying about, he's been a teacher and he's in the delayed retirement program. And he's just like, oh, I'll probably stick it out for another year. And he said something to me. It was just like, we've had a pretty good life. And I was like, "Yeah, a good life, but there's a better way." And I think being an entrepreneur and being a real estate investor, like you said, can get you there. It's that freedom of time, that freedom to be able to go and take a month off or go to your kid's recital, like you said, and just maybe not deal with whatever mess is at work telling you what to do, for
So true.
lack of a better term.
Yeah. And you in the Army too, you know how it is. Like I still remember to this day when my brother got married in 2018, he was having his bachelor party, and I get it. It's just the bachelor party. It's not his actual wedding, so it's not a big deal. But just little things like that. I went to my company commander and I was like, "Hey, look, I know it's just a bachelor party, but I only have one brother now. My other died, unfortunately, and I wanted to go to his bachelor party and take off, and I submitted leave, and he denied it. So I had to miss my brother's bachelor party, and he's my boy. I just never thought I would miss anything big in his life, and I just vowed right then. I'm like, that's never going to happen again. Nobody's going to tell me no ever again. I promise you that.
Yeah, no, exactly. Well, awesome, man. So for those out there that are just getting started that, I've been thinking about this, might be afraid or, haven't maybe pulled the trigger yet, do you have any advice for them?
Yes, stop overanalyzing everything. I know so many people like this, friends, family, the W-2 mindset. If they listened to or heard some of the stories I had about some of the deals I got into without asking enough questions, without analyzing enough, that's risk is essential to success, essential. And there's so many things that I would say, hey, I'm thinking about going to do this. And that typical, we all know that person. I think we all have that person in our friend group, in our family group. That's, you shouldn't do that because it's risky, this, that, and that. And it's usually somebody that hasn't even accomplished that much, somebody with less than a 6-figure net worth. And they just have that downer attitude. And they're just so afraid of risk that they have paralyzed themselves. And real estate, I get it. That's an industry that's, like I said, very forgiving. But entrepreneurship in general, I would rather fail. I'm being serious. I would rather fail, try again, fail, than go and work that W-2 for 30 years. Because to me, that's the biggest failure. Because then I'm just, for me, sorry, let me clarify. Everybody else, never makes you
Yeah,
happy, love that. But for
I get
me,
it.
that's not what I want. So that was my worst case scenario. So going and failing at entrepreneurship and having to try again and having to try again, I'd rather do that 20,000 times than go and just settle and say, this is all I can do.
No, that's absolutely great advice. And the other thing that you said there that I latch on to is some of the people that are around you are more fear. And again, home for Thanksgiving, I'm telling people what I'm doing and getting into real estate syndication and buying multifamilies. And the first thing I'm getting is, oh, I had a buddy and they had a tenant who was in there and they couldn't get him out. They destroyed the property. And all of a sudden you get all these doubts and the why you can't. And you got to let some of that stuff just bounce off of you. And then the other piece, which we're lucky to have, is surround yourself with like-minded people and positive people. And our mastermind has been awesome for that because it's about creating new opportunities and new directions and finding, all right, how are we going to fail forward? And
Yes,
that's okay.
preach. Because I'm telling you right now, the humility of it is, I think, what some people miss. Asking questions, surrounding yourself with people smarter than you. You keep bringing up our friend group, and I could not agree more. It's just, if we ever have a question, you see what happens. Somebody posts it, and then we got 50 people who have probably done it before jumping in and answering that question. I have a family member on my girl's side who never been in rental properties and just always makes comments about, oh, it's risky, this and that. I'm like, it's only risky if you don't know what you're doing. And she finally cracked. She rented out this little piece of property. She had a little beach or pool house on her property, rented it out. And wouldn't you know it, it went poorly, and the tenant like stopped paying rent, and she didn't know how to get them out. But she never once came and asked me or my girl, who is also an investor with me, or anybody, hey, what mistake did I make? What mistakes should I look out for? How do I fix this? What's the best way to get back into it and not make a mistake again? Never once asked any of those questions. She just had it go poorly. When I'm sure she went and told all her friends, don't get into rentals because this will happen and that'll happen. And because she didn't have the humility to come ask questions from somebody who's more experienced, she had a bad, it's like going snowboarding the first time and breaking your back. You're never going to go again, but you did it wrong. Or you didn't prepare yourself, or you tried to go off a jump you shouldn't have gone off without knowing what you're doing. So I think people just need to humble themselves, ask questions, surround themselves with smarter people, and then you can pretty much do whatever you want at that point. And even if you fail, you'll be able to get back up.
And that reminds me of something you said in the last Bigger Pockets interview. And they were asking you about your strategy and how do you make it work and how have you been successful? And I loved your answer. And it was just, especially for those of us in the military or in the corporate world, keep it simple, stupid. There's the recipe is out there. Just make sure you're doing the right thing, have the fundamentals down and just keep doing that.
Yeah. Yeah. You'll learn, you'll make stupid mistakes, but that's any industry. If you're avoiding risk, you're avoiding success. So just stop being so over analytical, jump in and learn some stuff after the fact. You'll be just fine.
Yep. So I got a couple questions here for you. Is there a tool out there that has been awesome for you that you've just latched onto, you're using it in your businesses and you would recommend for folks?
Yeah, for long-term rentals, it's property management. They use Buildium most of the time, which basically just puts every single piece of information, every piece of granular data, every report, every lease, every maintenance request into one portal. And then I, as the investor, can just log in every time I need tax forms or a lender. Lenders need so many documents. Every time a lender needs to see the leases, I can just go in on my own, download, send over all those documents. I don't do any long-term rental property management myself. We used to, and we use TransUnion's tool for that for credit checks and stuff, but it's just a waste of time. Property managers will do it for 8%. So there's really no reason to take them up on that, to not take them up on that. Outsourced to property management, they'll use Buildium. For short-term rentals, Hospitable is absolutely the way to go. They have some other cool ones too that we've used, but I found Hospitable to be the best. So if anybody's getting into short-term rentals, they use AI tools. They have marketing tools, auto response, just ways to make it more passive. I think that's what we're all usually trying to do, is just make this whole thing more passive so we can focus on our active income. So Hospitable basically allows you to take your Verbo calendar, your Airbnb calendar, mesh them up so you don't get double booked. I can have my property managers for my short-term rentals. I've got one for each one because we got one in Virginia, one in Maryland, et cetera. They can both log into Hospitable and I can watch all the correspondence between the guests and the property managers. If you can accommodate for if they're bringing pets, and I can even do this one really cool thing where if there's a vacancy the night before somebody's stay, I can set an algorithm in it that allows the software to say, oh, I spot this vacancy that we need to fill. Let me ask this guest if they want to stay later, or let me ask this guest if they want to check in earlier to fill that. And it auto sends that message. Every time it sees a spot that it can fill, it auto sends that message. I don't have to do any of that. And my property manager doesn't have to either. It's just automation. AI and Hospitable has all of it. And it's super easy to set up. And then you just set and forget. It does all the pricing on its own, everything. So Buildium, property management, Hospitable, that's, I think, the bulk of it.
That's awesome. All right. What on the education side, is there a book, a podcast, a YouTube channel, something that you read or listened to recently that made an impact on you?
Yeah. The big ones are always going to be, in my opinion, David Green and Pace Morby. They're just two different sides of a very valuable coin. One will teach you just about everything you need to know about the nitty gritty, like deed versus mortgage. Most people don't understand the difference between those two, how to get creative deals, which is so important in this environment. And then David Green, I find, is more of the bigger picture. He talks more about cash flow versus appreciation, common pitfalls, not necessarily about the specifics, but he knows a lot about lending. So those are ones I listen to a whole bunch. As far as books, keep my whole little stack here. Quitting Your W-2 Job, that's Quitter's Manifesto. Profit First is a great one if you're already into entrepreneurship. And then the ones that everybody's always read, Richest Man in Babylon, Rich Dad, Poor Dad. If you haven't read those, you haven't started in the right place. Yeah. That's like the 101 reading list. That's like the summer reading list. Before you even get to school, you should read those. And then another one we picked up, Devon Kennard. He was at BPCon this year. Sorry, I wasn't in the camera. He was at BPCon this year, and he is a really sharp, slick dude. I had never heard of him. Ex-NFL player that invests in syndications. Yeah, I'm sure you met him too, because he was on all the syndication workshops. And he's just a really smart dude. So his book, those would be the book recommendations. David Green's books are all good. And then those podcasts, I think you'll pretty much know what you're doing after you get on top of all those.
Yeah. I think I like the way you break those down for David Green and Pace Morby. And if you want to know tactics and you want to know the ins and outs of real estate, Sub2 and Pace Morby's, the vault that he's got is just ridiculous. There's probably not, as far as the single family space, there's probably not a better one-stop shop for all the things you need to know on investing. And then I love that, the strategy behind it with David Green.
Yeah.
That's awesome. All right, man. To wrap it up, where can people get in touch with you? I know you're doing the renovations in Philadelphia. You're looking for capital partners to invest in multifamily. So how do people get a hold of you, and what else do you want people to know?
I'm going to put out just my Instagram, my Facebook. They're all just Jefferson Calloway. You search, I'll pop right up. If you want to email after the Bigger Pockets podcast, a lot of people emailed. So Jefferson@calcapital.us. That's CALCAPITAL.us. Just shoot me an email. But I do just want to say one thing. I got a lot, as you can imagine, of messages, emails after the Bigger Pockets episode came out. And it's a lot of soldiers that came out that were just like, hey, can I pick your brain? I'm in a similar situation. And I'm willing to do that. That's not a problem at all. I could shoot the breeze about real estate all day, trust me. But eventually I think it's going to get to a point where I can't really respond to. If somebody's going to reach out, not just to me, anybody, just a general recommendation, try to offer some value, some partnership, something like one guy's, look, I'll pay you for your time. That's one guy I'm going to respond to right away because I'm like, basically they're asking me for free consulting and I'm not like a big shot or anything like that. It's just, if I get 20 or 30 messages, I got a full-time job. I can't respond to everybody and jump on a call with everybody to just be giving out all this information for free. So I would just say, let's partner up. Let's do a deal together. Let's pay for somebody's time. I would just try to go that route. But in general, those are the places you can find me, reach me, follow me, reach out. We'll partner up on a deal. I don't mind doing that. And then I think that's pretty much it. That's email, that's Instagram, that's Facebook. Yeah, you can reach me at one of those places.
Yeah, and that's great too. I think there's so much information that's out there right now that you can go and get that. If you're getting started, do your due diligence, do your homework, and then when you're ready to find a mentor, figure out how you can bring value and partner on something, because that's really a great way to learn. I think we'll leave it there, and I just want to say thanks so much for joining me again as my very first guest on The Power of 30. It's been awesome.
Yeah, thanks very much, Dan. I really appreciate it. It's a fun podcast and the people tune in.